Well, there's a lot going on in the markets right now. Crypto has been pulling back, although we've seen a bit of a bounce. The equities are having their own little roller coaster ride with what looked like a promising rally earlier today from yesterday, and it's starting to pull back a little bit. Looks very corrective. So this is an update on EOS, and EOS has been one of the more precarious cryptocurrencies, one of the most precarious altcoins of any, because we're getting very close to our point of major invalidation. That was the black hole that I had been referring to over our past several updates that sits at 128. So that is the big picture chart. And we're definitely down low enough that we might be done with this crash. We have absolutely gone more than deep enough to complete it. And there is a divergence forming in the MACD, the MACD. But before we jump too far ahead in the big picture, let's look at the small picture to see what's going on. Ever since our last update, we've had a lot of developments in that we've had multiple coins break their supports. The support that I'm referring to is the low that most of these coins hit on February 24th, although a couple coins like Bitcoin, Ethereum, and Ethereum Classic hit their lows on January 24th. So either way, that is where I'm setting support, and breaking that support, specifically $1.86 for EOS, would invalidate the bullish setup for an immediate rally. So that this is what we're looking at with our orange pattern here. You got a 1, 2, 3, 4. And we looked like we were about to complete our fifth wave higher, but then we had a bit of a failure to launch, and it looks like we are following through with our red pattern. Although in EOS, we haven't invalidated our bullish pattern yet, we have come very close. We've gone down as far as $1.90, $1.91. So we were within 4 cents of invalidating the structure. And I fully expect this to follow through because we've seen exactly that in Chainlink, which has been the one I put a community post about, which actually did break it a few days ago. And unbeknownst to me at the time, the same thing had happened in Polygon a couple days before that. On April 27th, it broke its support. Then you got Shiba Inu, which also broke its support. And well, we're waiting for this to go a little bit lower to invalidate a little bit closer. And finally, as of yesterday, I made an update on Polkadot. It too broke its support, its February 24th low. So again, it looks like the cryptos are falling down to the downside, but all hope is not lost because we're very likely much closer to the bottom than we are to the top. Now I have this crazy diagonal pattern drawn out in red. There is a chance we have a pretty hefty bounce before we have a final fifth wave lower. I don't see most of the other coins going through this because EOS has already come down so far, and our ideal retracement point is not too far below. So I could imagine us having a lot more whips on EOS. We already have seen that with the second wave. So you could imagine this ending in an ending diagonal fashion. So shifting back to the big picture, again, we have our MACD divergence. And when we take a closer look, well, we've hit our target box multiple times. It's not the first time. Our 1.764 extension would have fallen at 196. That is referring to this entire C wave where we have a 1-2 setup to the downside. And we've had a 1, 2, possibly a third wave on, again, January 24th or so. Maybe the bottom of on February 24th was the actual bottom of the third wave, whichever one it is. We count this as a big fourth wave bounce. And either we have a little lower to go to finish our fifth wave, or we're going to have a truncated fifth wave, which is a possibility. We may see that in the Dow and the S&P 500. But really, for all of our intents and purposes, there's really no difference between green and red. So there isn't really any official point of invalidation. I guess you could say if we break that 186 mark, green dies, but the upside projections would be almost identical, even if we do follow through and go a little bit lower on red. And again, just reminder, we do again have that 128 support, major support, not too far below. That is the low that we hit on March 20th. This is the only crypto that I'm following right now that is anywhere near completely invalidating. But again, we have lots of signs that we're about to turn back around, and EOS has a history of furious reversals. So this is where this is where the practical side of this video comes in. If you are trying to either buy, or if you're getting a little worried, feels like the world is ending, this is how bottoms feel. As I speak, you can actually see the S&P 500 has already started to pull back quite sharply, to say the least. Already down over 1% from our high this morning. Cryptos look like they're turning. Ethereum is sitting at 2675. We've gone below 2600s. It's actually time to start thinking about buying, not selling. This is how you BTFD. Yes, there may be more downside, but it is actually safer to buy right now than it is to sell. So regardless of what you do, whether you want to take some off the table, reallocate, hedge yourself using BTO, ETF puts, whatever you want to do. As I showed in the video earlier, do not panic sell. As a matter of fact, it may be safer to panic buy. I'm not necessarily encouraging to put everything in there. I want to see more of a sign that we have bottomed. And as I start seeing more and more coins break their supports, I'm going to become more convinced that we are, well, that we're closer to, well, we need to see at least a 5-wave bounce up from whatever the bottom is. So that is the big picture. I'm going to shift over to the equities, stock markets, because again, we have seen very close correlation between the stock market and the equities market. I know this is a very close-up 1-minute view because I've been watching this like a hawk the past, well, 2 weeks in a row, something like that. I'm gonna erase my drawings. You can see here that we have our A wave. Presumably it started in November and finished in February. Big fake out B wave bounce, and we are very likely finishing a C wave down, which could take us to a slightly lower low. And if this looks familiar, I wouldn't be surprised, or you shouldn't be surprised, because this actually looks a lot like what we saw in Bitcoin, where we had, or actually most of the cryptos, in which we had a peak in November and we had a bit of a fake out bounce, and we've been kind of seeing really nothing but downside since. So that is where we stand with EOS. It's not time to lose hope. Remember, this is where the actually the fear and greed index up a second ago. It's interesting how when you look at this thing, the fear peaks whenever the market bottoms. So we have our fear and greed, where's our put to call ratio thing. It's all the way up here. April 28th was the previous bottom we'd had. And you'll see how while we minimize, we have more of a higher call to put ratio, which is the inverse of this whenever the market is high. So it shows to you, well, this is hard evidence that the market generally does the opposite of what they should be doing. We like to short at bottoms. We like to go long at tops. So don't be that person. Follow the charts. And most importantly, once again, don't panic. So I'm going to have plenty more updates. Don't forget to subscribe so that you don't miss them. And give me a like if you enjoyed my video. Until next time, thank you for watching and happy trading.